What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online. As usual, uh, today or yesterday was dividend day on Mogul, so I'm just going to go through how my portfolio is performing so far. Tell you a little bit about the properties I have, and then actually just share a little, customer service experience that I had with them that I thought was worth sharing. Before I forget, they do have a new property that is in their VIP launch or early launch or whatever, whatever you want to call it. I'm going to probably do a video about this tomorrow. I'm going to spend some time, dig into it, do my due diligence, and then share what I think about it. But I think we have a little bit of time. They've only sold $17,500 so far. This one's a really interesting one, so I'm looking forward to digging into it and seeing what they're doing. This is a little bit of a value add, but in a strange way. So we'll talk about that tomorrow. So, what are we doing here as far as the portfolio goes? Um, you can see my dividends are continuing to grow because I keep adding properties. On average, they just keep putting out decent ones. I'm buying little pieces of most of them. I haven't bought a big piece of anything. Uh, you know, as uh, as much as I am going to say nice things about Mogul because I like the experience quite a bit, you want to remember you want to do your own due diligence on the platforms. I do have a link in the description to this video of where you can. There's a referral link to this site where you get 50 free dollars on your first investment, and also you can join the investment club that I'm in on there, the Mogul.Club, which helps you get some additional money back on each investment that you make. The math on that is a little convoluted, but you get some, and it's actually, they keep trickling in, which is nice. Um, there's also in the description of this video links to all the other places that I currently invest in fractional real estate online. Do your own due diligence on this platform, on all of those, and on any of the properties I mentioned. Just because I own some of these or have bought some doesn't mean it's the right answer for you. There's also a Discord link in the description of this video. You're welcome to join that. And there's a bunch of us that are talking about all the different platforms or investment strategies, and it's become a really good group. I'm getting a lot out of it. Hopefully, other people are too. But so let's jump into okay, how's the portfolio doing? Um, so overall, I've invested $16,550 in here. My annualized yield, because this is annual yield, but I believe this is actually the annualized yield, is 8.83%. So that's cash on cash. And that's taking into account that several of these properties aren't paying out yet, right? So this is based on my investment. But so, they don't pay out until they're closed and operating. So I'm going to go through all the ones that paid a dividend and how they're doing. This is the Axelrod. It's the first one I bought. It's a duplex in Houston that's being operated as a single unit for short-term rental. It was, yeah, like I said, one of the first ones I bought. It is a short-term rental, so it's fluctuated. But we had last month was a good month. The month before was really good. Last month is so June was fairly decent. Um, very happy with this cash on cash return, and I expect it to fluctuate quite a bit on these ones. This is one that I actually felt when I bought it. It's going to be the deal to beat. What's interesting is there's several other properties that have had better yields so far, but I also thought we got a good value on this one as far as price wise goes. Um, you can see I made a bigger investment in this one than any of the others. At the time, I didn't realize they put out a property almost every single week. I'm not yet prepared to put that much money in every week, if they are good. So I switched to doing smaller amounts, at least until I'm more comfortable with this. This is the Rhodes. This is a pad split style property in Mesa, Arizona. I actually got half of these shares, I think, for free from investing in here, and then I bought the other half because they were doing this bonus. This has been one of the best yielding ones that I've had. You can see the annualized yield is 12.35%. It's just been really stable since I got it. The WAGs, this is another short-term rental in Houston. Um, I think this is this the first? Yeah, this is just our first month of operation. But it's looking pretty good. What do they have as memos? Projected operation. Oh yeah, to kick off in May. So there we go. But yeah, great first month. This annual yield, I think, I'm not really sure what they did here. I think it's probably picking up, it's calculating a little bit funny because if you annualize this month, which is all you really can do at this point, it's going to be significantly better. Um, the Mafi, this is another pad split. This is, I think, is this the one in Decatur, maybe? Yep, Decatur, Georgia. It's another one that has just been pumping out a really strong yield. This actually might be the strongest one of all of them so far that I have. You can see, their first month is always one of the best because they don't have any debt service yet. But even then, when it picked up the debt service, it's still just crushing it. So that's one I really kicking myself for not buying more of that one. The Johnson, this is a short-term rental in Austin. Yes. This is the Johnson, not the Johnson 2. Don't confuse the two. They are different assets. Um, this one's been plugging along pretty well. It is, again, a short-term rental. We've got some fluctuations, but overall, I'm happy with how this is one's going as well. One of the things to keep in mind, and they've talked about this a little bit in some of their webinars, is that the short-term rentals, those are properties that we'd expect to have better appreciation over time than the pad splits because of the neighborhoods, because of the nature of the property themselves, and whatnot. And so I think it's pretty consistent. The yields on the pad splits tend to be better, but I think that they should end up being relatively equally good investments. I expect. It'll depend a lot on how they both go as a business model over the next several years. But I think I do agree with their thesis that a lot of the short-term rentals tend to be properties that you'd expect better appreciation for than the pad splits, at least from looking at the actual aspects of the property itself, the neighborhood, the quality of the properties and whatnot. Um, Next one I bought some of is the Celeste. This is another Houston short-term rental. Um, it's only the second month, I think. But really, really, let's see, where did lost track of it? Yeah, really, really strong monthly yields here as well. Um, was I pointing at the wrong thing? No, okay, same thing. And so good annualized return so far. Now again, for a short-term rental, your couple of months, it doesn't really tell you anything about how it's going to do in the long run. For the pad splits, they kind of do. I mean, you might have a little tiny bit of seasonality, but it won't be at all like the short-term rentals. The Victor, this is what is this? Atlanta, Georgia pad split. Um, another one that's just it did May had a little bit of a rougher month, and I think they said, yeah, they had a one-room vacancy. It's nice to see that they can have a vacancy and still have a decent, that's still a decent yield, right? But then when it's filled back up, that's a great yield. The Andres is again the Decatur, Georgia pad split. Um, another real strong yield. I mean, you can just see this, like their pad splits are just killing it, and that's why I think they're adding more and more of these. And then the Chelsea is another. Let's see, another Atlanta area pad split. Um, and again, first month decent yield. What's interesting, this one did actually pick up the debt service payment in the first month, where some of them I mentioned, they didn't have it in the first month of operation. So I'm not sure exactly how that happened. But it is, still very, very happy with the yield on this one. You can see I still have three that haven't closed and operated for a full month yet. And so this is what I was talking about too on Mogul. I complained about some of the other sites quite a bit. There was a couple of things. One, this was showing that it should have paid a dividend, but it didn't. When you looked at the actual property itself, it was really clear it couldn't have closed or it didn't close yet. So of course it wasn't going to pay one, but it was messed up here. And then there was one other thing that I had mentioned too, and I can't even think of it offhand what it was. But I just open. Oh, I can actually look in here and look at my history, right? Look at. Oh yeah, and so that was off, and so I said, hey, I just mentioned that, and then I also mentioned that the Chelsea had a note about the gay talk. I don't know what that is. One of the other properties, right? And so I mentioned that, thinking, okay, starting to worry, right? Like, uh-oh, are these guys slipping a little bit? I've really only had good things to say about them. putting as they put out info for more and more properties each month, I do think there's going to be, some operational hiccups. But so anyway, I sent that message, and like 20 minutes later, it was both of them were fixed. And I actually noticed one other thing and message him, but like late tonight. So I would guess that's going to be fixed tomorrow. And that's one of the things I think a lot of times when you're dealing with a company, like you never expect them to be perfect, but the way they handle things when they make a mistake, I think is so telling, right? And that's one of the things you've heard me complain about Lofty a ton. Like, the first thing they do is try to explain away what they did, or they first it seems like they don't even believe you that there's a mistake, right? That's usually the first step, and then they try to explain, well, why they did it the way they did, and then maybe they acknowledge there's something wrong, and then maybe there's a fix. But these things like drag on forever. It seems like sorry, I always end up complaining, but like, so to see a couple things that were wrong, to mention it, and to have it fixed like just instantly. I mean, I was shocked at how quickly. And they're small little things, right? I mean, neither of those things take much time, but the fact that they actually just are addressing those things that fast, and again, they have smaller inventory right now. They have less properties that they're having to update this for, but they also are a newer company and have had less times to like sort of build some efficiency and checks and stuff in that process. So I don't know. Again, I mean, it was just another, all I don't have it like as I've mentioned, I don't have a ton invested on this platform yet, but as the more I experiment with them, the more I think this is going to be one that ends up having a lot of my money eventually. Like one, they just keep putting out good properties, as I mentioned. And I don't know if this one's good yet or not, but I think I've bought 11 of the last 16 that they put out or something. 12 now of the last 16 or 17 that they've put out. So, basically buying two-thirds of everything that they come up with. Whether or not that will continue is yet to be seen. But in general, I think that they're just smart about the properties that they pick. They seem to be, they just seem to really know what they're doing. They're really open to feedback. They're quickly fixing problems. So yeah, I mean it's been a pleasure to invest on this platform relative to some of the others. Now, at the moment, it's an illiquid investment, right? I can't take it off. That's something they have plans to fix in the future, but we'll see how that actually works out. But it's illiquid now. My rental income, I can take that out. I got whatever my dividends are each month. I can take that off if I want to. I have just chosen to continue to reinvest that because, I'm planning to move a lot more money onto here versus wanting to take some off at the moment. Anyway, that's how my month went on Mogul. If you're investing on here and you have a different experience than me, I'd love to hear about it in the comments to this video or jump in the Discord and feel free to share it. If you have any insights into this property, the Pinkman, let me know because, like I said, I'm probably going to do the due diligence video for this one tomorrow. There's already been a few people that jumped in our Discord and talked about it a little bit. Showed some new construction that's nearby, a couple of other things, and so whenever we can do that, I mean that's the whole goal here, right? To have a community of fractional real estate investors that are helping each other out, working together to make it a better community. And I feel like we're doing a good job of that so far. So I appreciate it, guys. Keep it up, and ladies. I feel like there were at least a couple ladies that joined the Discord. Sorry for the immaturity level that we have in there. If you're one of them, I think you probably see some of that. But I think it's mostly just a lot of people having fun though. Anyway, that's it for Mogul. For the update for my what is that June dividends. I do have a whole playlist for Mogul that'll probably pop up if you want to look at any of the properties that I've already looked at on here, because some of them are still for sale.